And we're sitting down now with Steve Pottle, who is the chair of RIMS Canada Council. He was just on a panel talking about commercial insurance and some of the different elements that what may lie with the future of commercial insurance. And that panel certainly took a wonderful turn, talking about all sorts of different things. I had the pleasure of even listening a bit and asking a question. But Steve, let's talk a little bit here. As chair of RIMS, what do you see as the overall sort of concerns for the industry when you look at risk management and what the insurance industry is experiencing right now?
I'd say one of the challenges right now is just the complexity, diversity of risk, but even more so just on disruption. If you look at how the world is being disrupted, geopolitically, climate change, AI, you name it, it's how do we keep ourselves sort of at the leading edge of those conversations? And so as risk managers, as opposed to being reactionary, are we actually having generative discussions about these key risks? And I think from an insurance perspective, we rely on them to sort of be those partners when we have questions about coverage, when we have questions about, is this something that we can even have insurance against? Or is it ones that we as risk managers have to take back and say, you know what, we have to absorb these risks ourselves, either internally or through other alternative risk financing techniques. But ultimately, these decisions need to be made, and they need to be made in a way that grounds us in facts and not fear. But at the same time, it allows us to sort of be, what if, and then so what? That's the questions that I get a lot right now.
I love that expression, ground in facts, not fear, because I think there is a lot of fear that comes with insurance, and having a lot of experience on the distribution side and sales, fear is used as a sales technique. And really, we should be using facts about why these things are relevant, why these products are there. I did want to circle back to one thing you mentioned about new products, or should products be developed. With risk management, is that a key idea of how you look at risk is, hey, we should make a product for this, for the transference of risk? Or is it more about mitigation and things like that? Because my opinion, this is where I go on a bit of my soliloquies here, is the insurance industry is a little bit slow to build out products. We have all these product manufacturers, but they seem a little more focused on other things than the creation of product. Are we lacking in products then?
Are we lacking in products? I think what we're lacking in is the cohesion in product. Okay. When I say that, I mean, I think at some point we have to get out of the traditional silos of property, boiler, liability, cyber. Ultimately, look at the risk as a unified entity and say, can you build me a product that actually covers that risk, as opposed to specific silos within that risk? I mean, that's years in the coming, but I think, as we look at cyber and boiler and property, they are almost interrelated in terms of the triggers that could possibly happen. And I think those are the kind of exciting opportunities that I think exist within the insurance industry to say, okay, let's flip this on the head. It doesn't have to be one or the other. It can be all of them covered under one program. And I think cyber is heading that way as a core as a core coverage. But I think it needs a little bit of a push from the risk managers and say, hey, as your clients, as your buyers of commercial insurance, we're still seeing gaps. And gaps concern us because ultimately we have to find a way of either transferring that gap or holding it in and managing either internally or just saying, no, we're not going down that road.
So let's talk specifically about cyber. Are we sort of at the tip of the iceberg with what we understand about cyber? Because it's still seen as a relatively new coverage in some sectors, even though the threat has been around for a long time. Ransomware has been around for a number of years. But adopting the product is still a hard sell. It still can be difficult to explain to certain entities who need the product how important it is. But also, is there enough capacity to cover the fallout of a significant cyber attack?
I would almost flip it on that head, only because as a risk manager, we find it incredibly, depending on your market, and in, let's say my particular market, higher education, we find it incredibly difficult to actually get cyber insurance.
Yes.
And so if you don't come to the table with, the basics of, risk management when it comes to cyber and IT, you're not even they're not interested in listening to you.
Yes.
And so sometimes it's a struggle to say, okay, well, we know we need it, we just can't get it. In other markets, more sophisticated risk managers have no problem getting it. Is it covering all the risks that are out there as it relates to cyber? And I'd say it's not yet. But that's why the evolution of product, over the next 5 to 10 years is crucial, because without it, again, we're at that situation where you're sitting in front of your board of governors, your board of audit committee, and being challenged. Okay, so what happens if? Again, it goes back to that. So what if scenario where what happens if this happens? We're not covered. How much coverage do we need, and how much coverage do we need to insure? And those are always challenging questions. Like, you can never buy enough insurance. You can never have enough limits. If you're a board member and you're going to say, okay, well, we have this much, but our exposure is this. Why do we only have this? Well, because at the end of the day, that's what we could get, or that's what we can afford.
In some ways, insurance is a finite product. There are limits to what it can do and what it can provide, and certain things. That was a very interesting answer about cyber and some of the nuances with it and how we look at risk. When you consider cyber as a threat and the capacity for it, what are some of the things that we have to talk about to business owners about this? Because we're in a weird cycle right now. We've come through a very difficult, hard market. There is segments that are softening up. I won't say it's general. It's definitely, I believe it's segmented, and that's a good news. But with the capacity availability, companies are now looking at possible recession and different elements that come with higher interest rates, a slowing economy. We know as business owners, they like to make money and they don't want to sacrifice it. But from a risk management point of view, are companies looking at what percentage of their profit should be going into risk management? Are they even thinking that way? Even from smaller ones, let's pick on restaurants where they couldn't get insurance for a long time. Were they investing in the right things to make them eligible? And is that something that needs to be trained into owners of businesses who may not think insurance a risk?
Absolutely. I mean, the small and medium enterprises are the ones that, in some respect, carry a lot of risk and are insured probably to the minimal amount they can, because they see it, again, as a product. And I always find it interesting when we talk about insurance as a product, because to me, it's like it's not a commodity. It's actually a promise that I'm paying for, a promise to settle and that sort of thing. So I would say that small and medium enterprises have a huge risk exposure right now that you can't insure. And if they're told, well, you're paying, say, $500 million or $5 million worth of premium, but what you're getting for that
is
exponential. But again, it's all bottom line driven. So the crisis that we have in the West, or with stratas and condo insurance, it's meeting with the strata owners and condo owners and say, okay, folks, get past the bottom line. There's an expense to this, but at the end of the day, you're actually safeguarding your asset, your condos, and your people that live there. And so there's an exposure that, it comes at a cost.
Well, I mean, I don't like to get too much into financial understanding of things, but you brought up condos, and let's talk about, particularly in your neck of the woods here in BC, we all know the challenge that the condo market has had there with access to insurance. But we also have another threat there, which is the big one. It's coming. You don't know when. And I always wonder right now, and I'm originally from Vancouver, I understand the threat peril there, how many people who are collateralizing their property, right, have the deductibles to pay if they do have a quake loss? That's one of my big things. Who is sitting on that much liquidity to pay their deductible, particularly if they're using their home as a bank account, whether it be with a HELOC vehicle or something else? And what's it worth if it's not there anymore?
Oh, exactly. I mean, if we focus, let's say, on the Lower Mainland and the earthquake risk, even out here in Montreal and the Ottawa area, I mean, there's earthquake risk here as well. And that, again, goes back to, in some respects, the insurance industry saying, hey, this is a non-starter. You need to carry this insurance or we can't safeguard your property. But at the same time, the owner or the risk manager of that organization has to say, okay, well, I still need to keep at least X amount. It's not just one deductible. You should be able to hold somewhere like a couple of years worth of losses in a reserve. And it's just good financial management to sort of safeguard that money.
And we can trickle that down to the same lessons we learn as homeowners and people.
Absolutely.
You should have 3 months' salary saved up in case something goes wrong. I mean, I think now you could modify that advice to say 6 months or more. And that's a very hard thing to do in our economy right now. for a whole host of reasons, which is a whole other different discussion. Another question I wanted to ask you is politicization of risk. I won't pick on regions in the country, but we're a vast country in Canada. We have very different political beliefs depending on your geographic location. Does that play a level in risk and how we manage risk?
Oh, absolutely. I think in some jurisdictions, risk is actually looked at as an opportunity. It's capital. So how do we keep leveraging that capital? Because we need to, generate income. We need to, expand. In other jurisdictions, it's just the opposite. We are very risk averse. Therefore, even if you look down at the city, municipality, and even the regional levels, some organizations at the public sector side are very risk adverse. And so they will protect themselves with as much insurance as they possibly can, pay the lowest deductibles that they possibly can, but at the end of the day, are they actually addressing the key question, which is this risk really that bad, or is it really, really bad, or is it just something that we have to manage on a regular basis? And I challenge us from a political side to say that take the politics of risk out and look at it as an opportunity. Risk is really just capital.
Yeah.
And if you think of it like that, then you will ultimately be able to manage it just like you do any of your other capital lines. But take the politics out of risk.
Yeah. It's hard to do, but you're right, it needs to be done. My controversial insurance opinion that I think no one agrees with is I never say insurance is a transfer of risk. I say it's an access to capital in the event a risk becomes a reality. And that's really, I think, the fundamental purpose of it. And then we pool those funds because it's easier for everyone to pay. But it seems when it comes to underwriting now, that companies are using so much data to specify how to target certain risks and whether to insure them or how to price them. Is that getting away from the principles of insurance and overall risk management in the way the concept of insurance was founded?
Oh, that's a good question.
That's a bit heavy, sorry.
Yeah, no. So, yes. I would say that underwriting actually has gotten smarter. I think we have been so spoiled over the last probably 20 plus years in such a competitive market where underwriting, where the underwriter was, okay, that's good, but we're still going to underprice it. And because we want the product, we want the mark, we want the buy. And that's not right. And so I think out of COVID, into the that kind of hardening market that we have, you're actually seeing more disciplined underwriting. And guess what? That comes at a cost. So as the risk manager, okay, so now you're telling me if I want to come to the table, I have to bring X, Y, Z, deal. Because I know that I want that insurance product that you're providing. Otherwise, you know what? I have to go back and start rolling up my sleeves as a risk manager and say, how do I make my risk more attractive? And I think that is sometimes a very challenging concept for, even the large enterprises that have, large organizations with a, dedicated risk management team. They just assume that their risk is insurable, is a really good risk. But you know what? Challenge yourself every year. When you have a claim, when you come to renewal, whenever, any kind of transaction, that this is the time to sit back and say, okay, are we actually as good as we think we are? And I would say that sometimes we're not.
Yeah, I've always told sales teams that when you're bringing a new client in, think of it as matchmaking. Yeah. How good does this client look to the person you're going to match them with, which is the insurance company? Yeah. And are they going to say, yeah, I want to spend some time with them? It's the way of sort of reshaping how we look at things. And sometimes it's an easier way to sell something. I guess I come from sales and marketing, but that's sort of the purpose I always look at is sell someone something and make them believe in how you're selling it. Now, final question for you before we wrap. This has been a great discussion. Obviously, InsurTech and technology is driving so much change in the industry. Are you seeing or have thought of or believe in any new technology that can help with risk management and to make it easier for the stakeholders involved in managing risk? Is there anything on your horizons that you think are working, or is there anything you have that is kind of a wish list thing?
Oh, there's lots of wishes that I wish technology could take care of. Number one is making sure that the kids can then, put the stuff in the dishwasher and hit the button. Yeah. The technology involved in that would be great.
Yeah, exactly. Well said.
To go to your question, where I am now in the interior of British Columbia, I would really think that there is an opportunity from both an AI perspective in terms of looking at the landscape, actually taking that generative AI and starting to do some proper, fire mitigation mapping, flood mapping. I think we need to get better on mapping so that we actually see the exposure. And this actually helps, let's say, cities and municipalities, regions, you name it, to start to plan, okay, well, this is probably not the best place for us to putting up another community. This is not a best place for us to break. But at the same time, if you think about the infrastructure, the highways, the roadways, that have been, when you think of all the issues that folks at Yellowknife had to go down one highway, like where can technology help us to say, okay, you know what, that may be one route, but let's start to say there might be multiple routes to get people in and out, access the things they need. And again, from a claims perspective, I like the idea of having, adjusters and you name it, having access to drones. And you know what, the privacy I get, but I mean, ultimately, if you are trying to help someone and you can't physically get there, wouldn't it be better if we sort of got in with the technology we could, make an assessment of the property, as opposed to waiting weeks, sometimes months, sometimes years to get in there and say, okay, this is what needs to be done to get everyone back to where they want. Because that is really what insurance is there for, to help you get back to where you were before your loss.
Well said. Steve, thanks so much for dropping by. Great to see you on the panel, and enjoy the rest of NICC 23 in Montreal.
Thanks, it was great. Appreciate it.